Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Welcome to yet another promising edition of the Forex Morning Mastery, your daily dose of financial insight and trading strategies. It has been quite an interesting 24 hours. Since yesterday, where we had some position triggered across the assets. Remember, we have been monitoring three assets on our watch list for this week, which includes the US Oil Spot, the USDJPY, and of course the XAUUSD. All of our assets got triggered yesterday. US Oil Spot did very well. We had at the point we were selling, price moved against us, closed at break even, and then we saw price rise again. We also had the same scenario happen on the USDJPY, and except for the XAUUSD, where we see price action is currently in a limbo at this point in time. And of course, we do understand why the market is behaving the way it's behaving, has considering the fact that the assets we are monitoring are US dollar based. Definitely they are looking forward to clues and insight into the timeline of the Federal Reserve interest rate cut for the year 2024. And as a result of this, market participants are very cautious at this point in time, waiting for fresh impetus that will guide the next line of action. So as a result of this, it is understandable that key players in the market will be stepping aside, waiting for this fresh impetus, and that is why the market has been behaving this way. In fact, this has lasted for over 2 weeks now, but I think with the incoming data coming up today, we are likely going to be getting a significant traction going forward. So we'll have a sense of direction, I think, after today's economic event. So I encourage us all to stay tuned in, as I have very interesting and simple trading setup we will be using to guide our trading decisions for today. So grab your favorite beverages, biscuits, cakes, whatever you have there, and stay tuned in so you don't miss out on what we will be talking about today. For those of you who are joining us for the first time, who are wondering what this is all about and what is it that we're actually doing in this on this platform. Well, first of all, on a weekly basis, I usually share a couple of videos during the course of the weekend in preparation for the new week, and with the idea of trying to follow up with the details on this video, the Forex Morning Mastery was born. So as technical traders, we usually gather here every morning in anticipation of both the New York and London session, where we come to review our current position and of course use the historical data we have to position ourselves for the next move. So we do this on a daily basis, 8:05 a.m. UTC, 9:05 a.m. West African time, and I recommend that you stay tuned in, as the more time you spend with us in this community, the better you will get to understand our analytical approach and eventually be able to use the information to make your own independent trading decisions. Excuse me. And it's also important for you to note that my aim in this community is to equip you with the knowledge and skills necessary to make informed trading decisions independently. So stay tuned in. I welcome you once again, and of course encourage you to actively engage in the comment section. So I see a couple of comments here from Olorunishola Isaac. Good morning to you. Chike Kuka, good morning to you. Glad to have you around with us this morning. Torres Master says, I'm doing well here, and it's been a while since I joined the yes. Glad to have you around with us today. Trust you're doing very well, and hope you had a wonderful weekend. So with that being said here, and with all the nitty-gritty highlighted, let's dive right into the business. And of course, the first thing we usually do every morning, it's our routine, it's our ritual, is to keep tabs with the fundamental factors that will be affecting the market sentiment today. And for those of you who have been with me for a while now, you know how important these fundamental factors are, as they often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on the next potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring since the beginning of this week, we will be focusing on economic features from both the United States and the Japanese economic docket. Now, for yesterday, we did not really have any high impactful event, and of course, I had to include the mid-tier economic features, which revealed that we will be looking out for some couple of speeches. And of course, we had the Bauman speech, the Balkan speech, and Kashkari speech. Most of them I'm yet to get a full highlight into the details of what happened. Probably by tomorrow session I will be briefing you on that one, but I learned of Loretzi speech, which of course we will be talking about that when we are going into those assets. Now, today, Tuesday, February 13th, we are looking forward to the most important event for this week, I will say. That is the Consumer Price Index. Now, for those who do not know, the Consumer Price Index is a measure that examines the average change in prices paid by consumers for goods and services in the last 30 days, that's last month. And of course, a higher than expected CPI data can lead to concerns about inflation, impacting market sentiment, as it may prompt expectations of tighter monetary policy to control rising prices. So this is one event which is considered as an inflationary gauge, which of course will be giving insight into the easing cycle of the Federal Reserve for the year 2024. Now, to quickly give you a backdrop of what has been happening prior to recent times, as at last year we were expecting that based on the fact that the interest rate was gradually dropping in the United States, we were looking forward to a rate cut as early as the month of March of this year. And even as at the beginning of this year, we were looking forward to the rate cut, as the odds for rate cut was as high as 82%. And along the line, during the course of the month of January, week in, week out, the US economy keeps churning out robust economic features, from the CPI to the GDP data to the core PCE, the average hourly earning, and of course the NFP data, which came in earlier this month, all of which were giving us very, very robust figures. And this further emphasized that inflation remains sticky in the United States. And while these reports were coming in, market participants begin to become uncertain as regards to the tendency of an interest rate cut in the month of March. Now, to put the icing on the cake, we had the Fed chairman's speech during the FOMC press conference. That was last week, I think, a couple of weeks ago, where he did emphasize that the inflation rate in the United States is high. And as a result of that, the expectation of an interest rate cut has been taken out of the table, and the chances for interest rate to remain higher for an extended period of time now became the order of the day. And as a result of this gave the dollar a little bit of traction because of high return yield on that asset, as it becomes a viable window for investors to place their assets in. So as a result of this, so the last couple of weeks we were within a dilemma of when will the timeline for the interest rate cut will start. So majority in the market are looking at May at this point in time, and so we want to see what the consumer price index will bring to give us an insight into the trajectory of the interest rate decisions for the Federal Reserve. So this is why this data is very, very important. Now, if we look at the previous data for the month of December, that is the year on year, it came in at 3.9%, and for the month on month it came in at 0.2%, and for the data excluding food and energy it came in at 0.3%, and the year on year for the conventional consumer price index was sitting at 3.5%. And if we look at the data coming in, that is the expectations of market of the economies based on what is going on right now, the most important one here is this 2.9% expectation, which is quite lower than the previous data. Now, if it comes in lower, then the chances that inflation is still tamed is high. Now, with this situation, we might likely see a drop in the dollar. But if this rate, this figure comes in higher than expected or higher than the previous month, the chances that the dollar will rise now will increase. Now, as technical traders, what we usually do here is to try to understand the character of market participants in the market, and of course this would reflect on the chart as price action. And we do understand that the anticipation of this event has a way of influencing the sentiment in the market, which of course will transition into patterns and structures that we can easily pinpoint and use with the timing of this event to position ourselves strategically for the next move. So with that being said here, let's dive right into the business and let's look at things from a technical standpoint with the hopes of identifying potential trading opportunity. So with that being said, we shall be diving right into the business. Unfortunately, I did not open my USOILSPOT chart early, so I just hope it loads up quicker than expected. So let me just open up the other one because I sincerely don't know why my USOILSPOT chart takes a longer time to load up. I don't know if any of you experience such with your TradingView chart. If you do, please let me know. So while we wait for this chart to load up, I see your comment, Philip. Hey, good morning to you. Glad to have you around with us this morning. Okay, we're still waiting. All right, so finally it loads up. So the first asset we are going to be looking at this morning is going to be the USOILSPOT. And for those of you who are with me on both my TradingView and Telegram platform, I did give an update as regards to how we are going to be managing this position. And before we go into the details, and for the sake of those who missed out on our earlier session, let's quickly run through what we saw here on the 1 hour time frame that guided the decisions we made yesterday. And I also want to emphasize that I wouldn't be going into the higher time frame. I already did a top-down analysis on this asset yesterday, and if in any way you missed out on that session, you can easily revisit that session by navigating to it through the links right in the description box of this current video you are watching. And it's very important you watch them so you can have a background knowledge of how we were able to identify the key level, the patterns, and the major structures we were supposed to use to guide our decisions for this week. So the first important thing here was our key level, which was situated right around the $76.50 level, and I did emphasize how important this level is and how it had played a major role in determining the direction of price action in the last couple of weeks. And you know how we use our key levels in this community. As long as price remains above the key level, we look out for patterns and structures that supports the idea of buying. And if price goes below our key level, we look out for patterns and structures that supports the idea of selling. Now, with our key level situated at the $76.50 level, we begin to try to understand how market participants will react to this key level at the beginning of the week. And while we were trying to decipher what next will happen, we noticed that price action was oscillating just right around that key level to further emphasize how crucial that zone is. So in that regard, we saw price action confined within the $76.58 level and the $76.26 area to emphasize the prevailing uncertainty at that particular point in time. And as a result of this, you know how we use our ranges whenever we identify them on the chart. We exercise patience and wait for price action to either break out of the resistance line of the range to give us an opportunity to buy, or the breakdown of the support line of the range to give us an opportunity to sell. Now, during our live session yesterday, we already noticed price action breaking down the support line of that range, and I did mention that we will consider selling at a retest of that structure. The price came back to retest the structure, and in fact it moved over 70 pips thereabout. And remember, I did mention that we will be adding another position if price action goes ahead to break down the $76 level. And this is the same thing happened here. We saw price move, so we had two sell positions triggered yesterday, where the second position moved about 45 to 50 pips before the bullish momentum came in. And of course, you know how we do it in this community. Whenever price action moves significantly well in our favor, we move our stop losses accordingly. And if you have done so, you must have been taken out with a small size of profit, or at a worst case scenario, break even. Now, with this engulfing bullish candle that began during a couple of hours into the New York session, it came right up. Then it came out here to trigger our buy stop order. Remember, we did mention here yesterday that we will be having a buy stop order around the resistance zone of that range we identified at the beginning of the week. Now, with the situation here, we had price climb up, and during the Asian session, price continued to find higher highs. And if you still have your buy position running at this point in time, you will currently be having about 56 pips running in profit. So like I said during my commentary this morning on both my TradingView and Telegram platform, that it is high time we moved all our stop losses to secure this current buy position as it is right now. So please kindly move your stop losses, secure the current buy position. And while we are trying to move our stop losses, please let's ensure that we have enough breathing space for price action to move around. So I'm looking at anywhere between the $76.90 area and the $76.80 level to place any stop losses at this point in time while we continue to monitor price action. Now, with a well secured position at this juncture, what is going to be our next line of action? Well, it is very, very important for us to understand why price action has behaved the way it behaved in the last 24 hours. Now, the ascent of the US oil can be attributed to the escalating geopolitical tensions in the Middle East. That's one of the major reasons that happened. And notably, we had of recent reports showing that Israel conducted a series of airstrikes in the southern Gaza city of Rafah yesterday, and reports of Yemen Houthis rebels also launching missiles at a ship bound for Iran's port yesterday too as well. So the tension in the Middle East is still ongoing, and of course this is inciting a lot of concerns as regards to oil disruption from this particular region. Now, other factors, while we consider the factors that are supporting the ascent of the oil, we can negate the factors that will also constrain oil from climbing to find new highs, which of course will be needed to understand the technicalities around how the market participants are behaving at this point. And of course, we weigh both together and see which one has a tendency of moving price more. Now, potential factors that could constrain the upward momentum of price on oil has to do with the current high interest rate. Now, the high interest rate of the US dollar at this point, we all know now by now that based on the comment from the series of Fed officials in the last couple of weeks, it is clear that interest rate will remain high for an extended period of time, and this will also bolster the US Treasury bond yield. How we know how directly proportional the US Treasury bond yield is to the US dollar. So if the US Treasury bond real yield rises, definitely the dollar will rise. And when the dollar rises, this may likely contribute to the uncertainty surrounding demand, because oil will become high for those who are using other currencies to buy the US dominated oil. You understand what I'm trying to say there? So for those who, let's say for those who have the Australian dollar or the Chinese yuan, buying the oil will be quite high, and this of course will make the demand drop for oil. Market participants will now be waiting for price to drop a little bit before buying. So this could affect the demand for oil at this point in time. Then other things that could also affect the demand for oil is the upcoming meeting due to concerns about inflationary pressure, and also the turbulence, the sluggish recovery in the Chinese economy. As we all know, the Chinese economy is struggling to recover. And a couple of weeks ago, the Chinese People's Bank of China planned to inject 1 trillion Chinese yuan into the economy to increase liquidity. I'm not sure if that has happened yet, but as based on the data coming out from China, the economy is still struggling. And China being the largest importer of crude oil in the world, if the economy is not doing well, definitely it's going to affect the demand for oil. So these are factors that we also need to take into consideration before making any investment decisions here. Now, consequently, market participants will be closely monitoring the OPEC's monthly oil market report, the MOMR, which is set to be released today. And of course, this report is going to be influencing the global oil market, of course. And the reason why that is that we will, if this report comes out, it will give us an insight into the development within the crude oil market. And given this landscape, it is very, very important we secure all our buy positions, and let's see how the market will anticipate this report, and of course how they are going to react when the report comes out. But one thing we do know for sure is that the market participant will the character of the market participants ahead of this report will be revealed on the chart as price action. So as it is right now, we can see that as soon as price tested that $77.20 area, we saw some selling pressure resume around that area in the last 3 hours. And this of course also happened during last week Friday's trading session, and price is back into that area, as you will see here. Now what this simply tells us is that buyers are finding it difficult to break through that area, as every attempt they try to do so has been met with strong resistance from the sellers. Now, to help us guide our trading decisions for today, remember that we did identify a couple of ascending trend lines yesterday, and one of them is this one right here, and the other one is, hold on a second, so the other one is right here. So we have two ascending trend lines, and you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we continue to look out for patterns and structures that supports the idea of buying that asset. Now let's zoom into the current structure so that we can see things clearly. So as it is right now, price still remains above the ascending trend line. So let's see if the market may come back to retest the ascending trend line in an attempt to continue the uptrend continuation. So at this juncture, to guard this bullish momentum, I have a buy stop order above the $77.20 area. hoping that price will continue to the upside. If it does, it triggers that buy position. And mind you, for those of you who have been with me for a while, you know how we use this entry point. If you have been profitable so far this week, that is, if you are part of this profitable journey, you can afford to place a buy stop order above that area, because we can afford to risk some of the profit we had made so far this week to test waters around that area. However, if you are new with us and this is your first time taking a position around this area, definitely you want to be exercising patience and wait for confirmations like a retest of structure before jumping into that position. Now, another thing I would like to take into consideration here is the potential of price action dropping into the let me see where that is, around the $76.80 area. Let me put it like this, somewhere around here. So we shall label this 76. Here we go. So look at what we have here, and the reason why I am identifying this level is this. Now, this level here had played a major role in pushing price to the upside yesterday, during the Asian session, and then during the New York session it was more of a selling niche, and we saw what happened here last week Friday, selling niche here. And during the Asian session, price action did break out of this particular structure. And now what makes the structure more intriguing is the fact that it also shares a beautiful confluence with that ascending trend line we have here. Now, even if the sell pressure around the $77.27 level continues in such a way that it brings price back into the structure, it may serve as a retest of the structure that was broken at the $76.80 area to incite another wave of bullish momentum. So in as much as sellers may push price to the downside, we still have a bust up around the $76.80 area where we can look out for patterns and structures that support the idea of buying. It may come in the form of a double bottom structure, head and shoulder pattern, or even a falling wedge, when we will mark out the neckline of that structure to capitalize on that uptrend continuation. But trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. However, if price drops and breaks down the $76.80 area and we see price retest the structure where it becomes difficult for buyers to break above the ascending trend line or climb back above the ascending trend line, this could incite some selling pressure back into the ascending trend line, the second ascending trend line we have right here. Now, I personally will not be taking that sell position because I will see it as a short-term retracement as we still have price above our key level at that particular point in time. But if you are a scalper, you're a short-term trader or a counter trend trader will feel comfortable taking counter trend opportunities, well, you might consider selling the breakdown retest of the $76.80 level and looking at somewhere around between 65 to 75 pips in profit if price moves into that ascending trend line. So personally, what I will be doing from a long-term perspective, if price action does break down the $76.80 area, I will just exercise patience to see how the market will react to both the $76.50 level and the ascending trend line here to decide if we are going to be buying or selling. But definitely I will be giving you updates as at when due. But in the meantime, I maintain a bullish bias, looking out for buying opportunity above the $77.20 area, and if it retraces into the ascending trend line, which of course I said shares a confluence with the $76.80 level, will be looking out for patterns and structures that supports the idea of buying. So this is my simple view on this particular asset today. So our center of focus is basically going to be between the $76.80 level and the $77.20 area, where depending on the direction of the breakout of the structure will give us an insight into where price is likely going for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions. And if you have any questions or you need some further clarifications, feel free to let me know in the comment section below. So as always, I will take the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving right into the next asset on our watch list. So the next asset on our watch list for today is the USDJPY, where we have quite an interesting situation ongoing right now after we saw how the descending trend line we identified yesterday finally got breached to negate all bearish ideas we had at the beginning of the week. Now, for the sake of clarity, let's quickly run through what really happened yesterday and what led to the decisions we made. Now, I would also like to reiterate here that for those of you who missed out on yesterday's top-down analysis, you can check the link right in the description box below to navigate the video so that you can have a background knowledge of how we got to this point you're seeing on the 1 hour time frame. Now, with that being said, let's go right back into the business. And looking at the structure here, at the beginning of the week, we did emphasize that price action is still looking very bullish. We have structures on the higher time frame affirming that. And in addition to that, we had an ascending trend line, which of course we were using to guide our trading decisions yesterday. Now, in addition to this ascending trend line was this descending trend line we spotted after connecting the series of lower highs since last week Friday, giving us this scenario we had here. Now, in addition to the couple of these trend lines here was the fact that since the beginning of the week, price action was confined within the 149.325, where price started trading yesterday, and then we started seeing buy pressure around the 149.080 area. And I did mention here yesterday that we need to be very, very cautious at this point in time, as we could see how it becomes difficult for sellers to break through this area, as every attempt by the sellers to break through has always been met with strong resistance from the buyers. And in fact, we saw a hammer candle around this area, and one of the things I said here yesterday is that we will be looking out for a retest of structure before joining any sell position. Though we had price breakdown here, then price came back to retest, as you will see here, triggering a sell stop order, and we saw price move. It didn't really move very well at all. I think it moved about 15 pips, and depending on how cautious you are, if you moved your stop loss to break even, you must have been taken out of that position at break even. But if you didn't, still thinking that price may go further than that, then that position must have been closed in a loss. But it's okay. We saw how the market did break out of that descending trend line, giving us an opportunity to join that uptrend move hereby recouping any loss that may have been incurred at that particular point in time. And remember what we said here yesterday, that if price action breaks out of that descending trend line, that we will be using this level here at the 149.200 area to position ourselves for an uptrend move. And that means that we will be buying this asset even before the breakout of that resistant line at the 149.325 level happens. And for those of you who did capitalize on that opportunity, well done to you, as you will currently be running with about 41 pips on that first buy position, and with about how many pips here, about 28 pips on that second buy position, giving a total of about 70 pips running in profit at this point in time. And for those of you who followed my instruction, my illustration this morning as regards to adding more position at the breakout of the 149.600, if that is going to be the case, this one as well will be running with a minimum of 3 pips in profit at this point, giving us a minimum of 3 buy positions at this particular juncture. And once again, congratulations to everyone who did capitalize on this opportunity. So as it is right now, it is high time we moved our stop losses, secure this current buy position, as I mentioned in my commentary this morning. So at this juncture, I'm suggesting that anywhere below the 149.500, which happens to be the previous low, seems most appropriate. 149.500, 149.400 area seems most appropriate to move all stop losses to. Let's secure this current buy position while we also continue to monitor price action, with the hopes that price will continue to find new highs in this market. And of course, we all know why this whole situation is happening. The US dollar continued to gain momentum into the Asian session due to anxiety ahead of the US CPI data, which is coming up later today, and of course concerns about the potential rate hike following the dovish remark by the Bank of Japan's deputy governor a couple of days ago. I think, was it not? Okay, last week, I think last week Wednesday or Thursday, we had the Bank of Japan's deputy governor emphasize that though they may be pivoting from their current ultra loose monetary policy, but the rate hike will be very, very cautious. And this is not one thing that market participants want to hear, especially those who are looking forward to buying the safe haven Japanese yen. So as a result of that comment alone, we saw how the US dollar took advantage of that and continued to rise to the upside. Now, how far will this momentum go? We don't know yet. But one thing for sure is that technically and expectedly, the fact that interest rate will remain higher for an extended period of time is enough to allow the US dollar to rise. However, we do not know what is going to be happening today regarding the US inflation data. Is it going to come in as expected? Will it come in below expectation, or will it just come in as expected? That's another factor entirely. And the other thing is, how will the market participant react to this event, or even anticipate this event? So at this point in time, we need to be very, very careful, hereby very important that we move all stop losses secure in this position, and let's see how far this momentum will go. So right here on the USDJPY, we still maintain a strong bullish bias, and of course, if there are any new opportunities, I will definitely give you updates on both my Trading View and Telegram platform. Now, to make things a little bit more easier for us to guide our trading decisions and manage this current positions, let's quickly acknowledge the fact that since the beginning of this week, price had consistently found higher highs and higher lows, and technically, if we connect the structures, we should be having an ascending trend line to work with. So I will thicken this a little bit so that we can emphasize it's important, and let's see if there are little adjustment we can make if we bring out the candle chart. So there are adjustments, of course. So we have something like this. So this ascending trend line here will continue to guide this bullish momentum. And of course, you know how we use our ascending trend line. If this ascending trend line is breached and broken to the downside, we may likely see a crash from this area. So a breakdown retest of that ascending trend line may likely incite a bearish momentum to the downside. And to help us position ourselves for that, we have a structure around the 149.475, I guess, 149.475. So you want to be marking out that structure, and of course you can see how that level had also played a major role in the last 24 hours in this market. And interestingly, it shares a confluence with that ascending trend line we just identified there. So if price action goes ahead to break down and retest that structure, we will have no other choice than to start selling that asset at that point in time. But I will definitely be with you on both my TradingView and Telegram platforms to give you updates as at when due. So let's mark out those levels, and our center of focus is basically between the 149.600 and the 149.475 for today's trading session, where depending on the direction of the breakout will give us an idea into where price will be going for today. So I do encourage us all to mark out these levels accordingly. If you have any questions or you need some clarifications whatsoever, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds due to the lag in the streaming to see if there are any questions before we move on to the final asset on our watch list for today. And please do not forget to give the video a thumbs up. I can see over 12 people on board and the likes are below 3, which is unusual. Please kindly support this channel. This is the cheapest way you can actually support this channel. I really appreciate that. Your likes are valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them. And for those of you who have liked the video already, I really do appreciate from the bottom of my heart, and thank you very much as you do so. So I see your comment, Jonah Aruna. Good morning to you. Torres Master, that's how I say it at the moment. I think I hope with time they begin to like the video. Thank you very much. And the Road to Freedom says that what is the potential of seller coming into the market? I'm not sure which asset you're talking about. Is it the USDJPY or the USOILSPOT? I will assume it's the USDJPY, since this is the last asset we talked about here today. And I did emphasize that I did talk about the technical details as regards to the potentials of sellers, of course, and we talked about this yesterday too as well. You must have missed out on that one. And one of the things we said here yesterday is how crucial our key level at the 149.600 is, and this area is the highest level price action has been for this year of 2024. And for those of you who have been with me for a while, I usually emphasize how crucial and sensitive these areas are, especially when price finds a new high. It takes quite a long time, or it takes quite some time for market participants to acclimatize to that area before now finally gaining some momentum. So now, out of fear, especially for those who had capitalized on the trend up to that highest level, out of fear, they may want to start taking some profit off the chart with the hopes that maybe price may crash from that area. And due to this scenario, we see, as a result of this scenario, we used to usually see price action transition into either a retracement move, a consolidation phase, or a choppy market conditions, and then this goes on for a while before price action now finally gains some momentum. Now, because of this understanding, we had our key level right around the 149.600, And of course, you will see that since the beginning of the month, price action though has been close to this area, but we have seen how sellers have been negating all attempt by the buyers to break through that particular zone. And in fact, the last hour we saw the same thing happen around this area, and in the last couple of hours you will see that price action, despite the strong momentum we see so far this week, price has been struggling right around this area. So the potentials for sellers lies around the fact that there is selling memory around the 149.600 area, and if this persists, leading to a situation where it breaks down that ascending trend line and the 149.475, it may lead into a sell-off ahead of the CPI data. So we do not know what the key players are hearing from the inner circle of those who are going to be releasing the CPI data later today. Of course, we know that they have informations before we do, and they build up their positions ahead of that event. And usually, as technical traders, we want to sniff through the current market structure to identify their footprint and position ourselves to join their momentum when it finally happens. So the tendency for sellers coming in is still possible, considering the selling power around the key level at the 149.600. And like I said, if it persists, leading to a situation where the ascending trend line is broken and the 149.475 is broken and retested, we have no other choice than to join that trend to the downside. So this is what we are looking at today. I hope I answered your question. Road to freedom. If you still need some further clarity, feel free to let me know in the comment section. So Forex Master writes a long message here. I have developed an habit in this family where I start my okay. Thank you very much, Forex Master. I really appreciate your compliments. I really appreciate everyone. Please give it means a lot to me anyways. It means a lot to me. The growth of this channel means a lot to me. So I wish that it means the same thing to you too as well. And I hope that you help support the project to grow. And thank you very much as you do so. So in the absence of no further questions, let's move right into the final asset on our watch list for today. So the final asset on our watch list for today, of course, my favorite asset is the XAUUSD, popularly known as the gold spot. And yesterday we were looking at a bearish bias after considering the current structure, and for the fact that price action was trading below our key level, which was at the $2,025 area. A quick one again for those of you who missed my weekend video on the XAUUSD, please go ahead and watch that video so you can have a clinical understanding of why we have that key level around the 2025 and why it's going to be playing a major role in guiding our trading decisions for this week. And if you in any way missed out on that video, the links are right in the description box of this current video you are watching. So at the beginning of the week, we saw how price action was oscillating just right around a key level at the 2025 zone, and of course this made it made me feel comfortable that we actually identify the right key level to guide our decisions for this week. And of course price action was trading within a range, but it was more of a strong selling pressure in this market during the first 8 to 12 hours of the week, as we saw price confined within the 2027 and of course the $2022 area, a $5 range, to emphasize the prevailing uncertainty in the market during the specific time frame. And another factor we talked about here yesterday was the fact that price was trading below both the key level and the ascending trend line we identified in my weekend video on the XAUUSD. And for the fact that price has broken down the ascending trend line, retested it a couple of times during the early hours of the new week, and of course the continued selling pressure around that resistant line of the $2,027 area, as you will see, consistent selling pressure every time price comes into the structure made us feel comfortable selling the XAUUSD. And as a result of this understanding and observation, we decided to sell at the breakdown of the $2,022 area yesterday. And I did emphasize that we want to be having a wider stop loss due to the volatility that may happen in this market yesterday. And of course we saw something like that happen, and some of us did contacted me. They had a very short stop losses just right above that key level. They were taken out of those positions, and I did told them that we still maintain a bearish bias, and that if they were taken out, that they could still have a sell stop order below the 2022 to capitalize on the bearish move. And of course we saw price drop back down again into that area, and price moved about how many pips was that? Moved about 100 pips thereabout before the bullish momentum came in. And of course by that time we moved our stop losses, secure the current sell position. For those of us who were part of the XAUUSD live window yesterday, I did update it that we move our stop losses, secure the position, and depending on where you moved your stop losses to, you must have been taken out with a reasonable amount of profit, a minimum of 50 pips thereabout on that one. And for those who capitalize on that opportunity, well done and kudos to you. However, as we prepare for as we anticipate the CPI data today, we begin to notice some bullish traction, especially during the Asian session, that has brought price back close to the resistant line of that range at the $2,027 area. Now at this point in time, I got some couple of messages as regards to buying the XAUUSD, which for me, I'm not still feeling comfortable joining a bullish perspective on this particular market. And there are a lot of factors behind this. Now, the anticipation of a potential inflationary pressure in the United States has led to expectation that the Federal Reserve will refrain from implementing interest rate cuts as early as the month of March anymore. And of course we have the speeches from the Fed Reserve Chairman, and of course some other Fed officials throughout the course of the last 2 weeks, emphasizing inflation is high and that interest rate cuts is not likely in the month of March anymore, which of course has increased the odds of May as a potential timing for the next interest rate cut. Now, if interest rates remains high for an extended period of time, it will favor the dollar more, as investors will want to be putting their funds in the US dollar just to take advantage of the return on investment on that particular asset, and of course the differential interest value. Now, as such, with this in mind and with this perspective, it doesn't bring appeal for safe haven assets such as the gold. So with this in mind, I still think that the US dollar is going to gain some traction. And excuse me, looking at the current value of the US Treasury bond yield, which is currently around 4.1%, we know how this is directly proportional to the US dollar as well. So I'm of the opinion that price may still drop, and that the bullish expectations we saw here is as a result of some profit-taking activity going on ahead of the CPI data coming up later today. Now, given this development, we need to be very, very cautious, and I want to be leaning towards more of selling the XAUUSD today than buying the XAUUSD. Now, if I am going to be selling the XAUUSD, I have a sell stop order sitting below the $2,022 area, just like we did yesterday. And of course, you can see how beautifully this level shares a confluence with this newly identified ascending trend line. Now, if these two structures are broken to the downside, I will feel comfortable selling this particular asset. Now, we are looking out for selling opportunities below that structure. However, Well, you know how the market does. We cannot predict the market. We only try to strategically position ourselves for the next move. Now, if the market does otherwise and continues to climb and find new highs, how do we intend to capitalize on a buying opportunity? Well, first of all, I want to emphasize the fact that the ascending trend line we saw on the on the 4 hours time frame is this one right here, which interestingly shares a confluence with the resistant line of that range we identified at the beginning of the week. And remember what I said here yesterday, that before I can consider buying this asset, I would need price to break out of both of the structure, give me a confirmation like a retest of structure before I can start considering buying this asset, as that will be a good confirmation that sellers have lost the momentum outrightly, and then we can start considering buying at that point in time. And if that is going to be the case, we'll have no other choice than to join a bullish momentum. But as it is right now, I still maintain a bearish bias, and let's see how far this momentum is going to go. So mark out these levels on your chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So this is my simple view on the XAUUSD. I hope I made myself clear, but if you still need some clarifications, feel free to let me know in the comment section. So as always, I'll take the next 5 to 10 seconds to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a guiding light for today's trading activity. And please do not forget to give the video a thumbs up. Your likes are valuable to me, and please let's support this channel to grow, and thank you very much as you do so. So I see your comment here, Fred. Good morning to you, Fred. Trust you are doing very well. Fred is asking that does gold necessarily have to be an inverse of DXY? I probably mean you inversely proportional to the DXY. Well, the outright answer is no. Now, while gold and the US dollar index often exhibit an inverse relationship, it is not a strict rule that this is going to be the case. In fact, I'm not a fan of correlation trading. Sincerely, I prefer looking at the market for what it is. Now, there are times that both of them can move in the same direction, especially when other factors such as geopolitical tensions or economic uncertainty come into play. However, one thing we need to understand is this: when we are looking at the XAUUSD chart, I'm not talking about the DXY right now. When we are looking at the XAUUSD market situation as we are doing right now, what is really going on here? Of course, buying and selling is happening. And what are we buying and what are we selling? Now, if you are buying gold in the XAUUSD market environment, if you are buying gold, what are you using to buy gold? You are using dollar to buy gold. So what this simply means is that as you are buying gold, you are selling the US dollar. Now, if you are selling gold, what is happening? You are buying the US dollar for it. So it's inversely proportional to it. So if the gold prices drops, the dollar will rise. Now, another factor here is the fact that gold is a safe haven asset. Now, if market participants are not feeling comfortable with the price of, with the economic situation in the United States, for instance, and the chances that the dollar might not be doing very well due to economic conditions, majority will drop the dollar and start buying gold, which is a safe haven asset. So definitely what happens when that happens is that the price of US dollar will drop. Now, if, for instance, the inflationary pressure in the United States is high, and the tendency for an interest rate for interest rate to be high for an extended period of time is the case right now, majority in the market would rather want to buy US dollar due to the return on investment and of course the differential in interest rate value. So it's inversely proportional in that sense. But when you are comparing to DXY, well, I would say no, because it's a different environment entirely. So I do hope I answered your question there, Fred. I hope I do answer your question there. So I try to make it as concise as possible. So if you still need some further clarifications, please let me know in the comment section. So while this is happening, I think we have come to the end of today's Forex Morning Mastery session. It has really been a wonderful moment with you guys. I really appreciate every single moment, and thank you for the likes, thank you for the support. I really appreciate them. And so far today we were able to attend to 3 assets on our watch list, which includes the US dollar, the USDJPY, the USOILSPOT, and of course the XAUUSD, all of which we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today. And I do hope that you were able to mark out these levels on your chart. If you did, well done to you, as we will be needing them to guide our independent trading decisions for today. And it's also important that we also note that every decision or planning we make in the financial market, due to the uncertainty of this environment, it's more or less an educated guess. So with this understanding in mind, we do want to be having a well-defined risk management strategy in place to ensure that we mitigate against any risks that happen if price does the opposite of what we planned. So please, this is very, very important. Now, for those of you who have joined us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. If you have done so, I look forward to seeing more of you. Same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well the assets have been doing, and of course prepare for tomorrow's trading sessions as well. So it's on this note, I would like to wish us all the best of luck. And I forgot to mention that I have the link to the XAUUSD live window right in the comment section, pinned at the top of the comment section, so you can easily click on that link, click on the notify me button so you can get notified as soon as we come online. For those who don't know, the XAUUSD live window is a platform that was born out of popular demand from members of this community, where we come together on a daily basis to monitor real-time price action on the XAUUSD during the New York session. So it often kickstarts about 5 to 10 minutes into the New York session, and it lasts for about 5 to 7 hours depending on the nature of trading activity on that day. So I look forward to seeing you guys right there in the comment section of the XAUUSD live window. So I also saw your comment there, Fred. Thank you. You're welcome. I'm glad you found that useful, and thank you very much, Adeni Babalola. I just saw your comment. Trust you are doing very well. Glad to have you around with us, and looking to see you looking to get in touch with you very soon. All right, so in the absence of no further questions, I think we have come to the end of the Forex Morning Mastery session for Tuesday's edition, and let's look forward to see how the market is going to play out today. So do have a wonderful day. Trade smart, trade consciously, as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.